Good morning, good morning, good morning. My name is Adam Khan. This is my half-ass channel. So excited to see how the markets are reacting after the numbers this morning. Those of you who don't know me, my name is Adam Khan, which I mentioned. I was a professional trader on the floor of the Mercantile Exchange for a long time. However, I am not a financial planner. I am not an accountant. I'm not a lawyer. So use the information on this channel for entertainment purposes only, and reach out to your financial planner, your accountant, and your lawyer for any financial decisions you make. So, anyway, markets are looking unbelievably healthy. Like I said, the fear out there. We had 2 banks close. You would have thought that would punish the market straight down. And what happened is the big money must have taken the other side of that trade. And you see the market yesterday close flat. And today the S&Ps are up 65 or 70 handles, which is huge. If I were to guess, the Dow's probably up 300, 400, 500 or something. And maybe we see a sell-off towards the end of the day. Maybe the news is negative. But what I'd like to see is the markets kind of bounce around and not do much of anything. Same with the housing. Everybody's so over-concerned, and rates are high, prices are high, affordability is high. I saw videos on automobiles where, forgive if my numbers are inaccurate, because I'm trying to do it off of memory, but pretty good usually. That the average car went from $35,000 to $42,000, and the interest rate went from 0 or 1% to, let's call it 6.5% that they were using in the example. And the average car payment per month, they said, because they were comparing the same car, it has gone from $575 to $900 and something. But essentially they did the math, and it was a 60% increase. What they failed to calculate in there is kind of what I've been explaining to some of the YouTube real estate guys who are so negative, which is when you buy a car, most people figure out what they can afford and then look for a car within their budget. So my guess is, if what you could afford was $500-$600 and that was the average car, that you now have a smaller car, or one that isn't as expensive. Maybe you look to a used one, or try to find something that's closer to that average price if that was what you were able to afford. And if interest rates have gone up, well, maybe you need to find one that's $25,000 to make that payment match what you're comfortable with. Doesn't mean that people cease to work and stop living their lives. It just means they have to adjust to the new prices the same way they have to adjust at the supermarket that a loaf of bread or meat or anything else went up. So, my theory is houses were too cheap for a while. Interest rates were too low. And the people who bought got a good deal. And if it's different now, well, that's just the market now. By it being different and more expensive, just means it's different and more expensive. I don't understand why that means that the market has to crash, or why people would think that means, well, then it has to go back to where it was, simply because in 2008 we had a financial crisis. At the same time, we had a bit of a pullback in housing that then created a bigger problem, pushing the markets even lower. We're not in that same situation. And maybe the Fed raises a quarter at the next meeting. They're not going to be able to raise a half unless they really are just trying to crush the economy. But again, that shouldn't be their goal. Their goal is to pay attention to inflation and unemployment and try to get that into what they consider normality. I think a 2% inflation rate is a little bit optimistic, and I'm guessing that their projections and what they hope it gets to start to change as it gets closer to 4%. And if the economy's chugging along, there's no reason we can't have 6.5% mortgage rates and houses be just fine where they are. I think there seems to be this miscalculation as to the economy. As far as I can see, despite the news with all the jobs and the companies that have let people go, most people I know have a job that need one. They're worried about the news, and they're uncomfortable with the inflation because they can't afford as much as they used to. But I don't see them losing those jobs yet. And to be fair, I don't think I see them really losing those jobs. I think the economy is handling some rather large interest rate hikes. And if it balances out to be a soft landing and shocks everybody, I think that'd be wonderful. So please, let's not scare everybody out of the markets for no reason, and let them talk to their advisors to do what's best, because they shouldn't stretch too far, but they should still save. Maybe their advisor tells them to keep it in cash or treasuries because they pay a good percentage, but I don't know. I wouldn't be scared of other things. My God, the bank stocks yesterday were on sale. I bought a couple hundred shares of one of the bank stocks. It seemed like a bargain to me. I recognize it could be a mistake, but I'm not going to be scared of the markets because of the news. If things drop too far, that's the time to buy it. Housing's picked up. Mortgage applications have picked up. There was huge demand before. I think they just shocked the system by raising the rates so much that people get stubborn, and those who still want 3 or 4% interest rates are just not going to buy because they're angry or frustrated and feel like it's going to come back. Well, I'll make my bet. I don't think you're going to see 3 or 4% interest rates for the next 5 or 10 years. And I don't know if we'll see them in my lifetime, assuming I live longer than that. Maybe we do. But I think the rates will stay where they are. Well, I don't know what I think with them. But I don't think we're seeing 3% again. Not for a long, long time. I don't think the economy's struggling that badly. Maybe you do. Feel free to comment and tell me why you think they're going to go back down to 3 or low 4s. And explain what you see that would cause that, because where there's a misunderstanding is if that happened, that's going to drive the prices even higher, which was what the Fed's trying to stop. What I think the difficulty there is there still is a lot of cash around somehow, and the people with the really deep pockets, if the prices go low enough, they'll scoop them up and put them out there as rentals. I'd rather see the rates stay high, keep the investors at bay, and allow people to be able to buy a home where they're comfortable buying it. You lower interest rates, you're going to see the investors all flock in and pick up the rest of the properties and really cause even worse inventory problems. So, I don't know. It's great to point to economic data and say that the market is going to go this way or that way, but the markets go wherever the markets go, and anybody who thinks they know where it's going to go tomorrow, they don't. Neither do I. I'm not like, don't think I'm telling you I think it's going this way or that way. What I'm telling you is, if you want to buy a home to live in, what the market is today is what the market is today. And I don't know, that wouldn't stop me from thinking where it'll be tomorrow. I'm not too worried about that. Just stay in budget, please. That's all. Don't overbite. But what if all those guys that are so negative, what if they're not right? And they convince you you're going to see lower interest rates, you're going to see lower prices, and everything else, which maybe you do. Maybe you do. I'm not even arguing that. But if you don't, they've just talked you into being a renter for the rest of your life for some reason. So if you want to rent for the rest of your life, trust their information. If you want to own your own home, well, budget properly and buy a home. Don't worry about what the Fed's doing. Anyway, like, subscribe, enjoy. Don't like, send some comments. I'm pretty reasonable. If you make some good arguments, I'm happy to alter my position. I mean, it'd be hard to alter my position about me thinking somebody owning their own home is probably a good thing. But I don't worry too much about if it's going to drop 5%. If you live there, does it really matter if it goes down in value? I don't think so. So have a good day, everyone.